Hello traders, it's Samurai Trader here. Welcome to session 112. It's been a few weeks since I've released a video. I've been very busy with different things, different projects, and of course trading, running my live trading room that is, and of course my coaching room. So it's about time I got another video out to the public. Now actually this is really prompted by a video I recorded today for my members on a special coaching program I've got running, and I fired off a couple of trades just as I was preparing things, and I thought, this would make a great lesson. So I thought I'd do a video and run through a number of things with you. Now traders, what I cover in these sessions you can use on any market, whether it be stocks, futures, forex. It doesn't really matter. If you're expecting me to talk about how to make $1,000 a contract per day in a matter of a couple of days or a couple of weeks, this is the wrong sort of video for you, the wrong channel for you. But on the other hand, if you want to see how to make some serious money as a professional trader, watch, listen, and learn, because I'm going to show you a number of techniques and show you exactly what I'm looking for on the charts. But I'm going to give you a bit of background first on a few of these things before we get into the actual techniques. Look, this might go for about 30 minutes, but I promise you you'll walk away with techniques and ideas and strategies you'll probably be able to use with your own trading straight away. So you'll hear me talk about $1,000 a day, and I'm going to be showing you how to actually do that. Now I mentioned I was already, and this is not a promotion on this, by the way, this is something I sent out to my members, just a program I run just with 12 members where I do one-on-one. But this is where I recorded these or traded this morning preparing this. So members watching this, be on the lookout for this email. It's actually just been sent. So I know that many of you will watch my promotional videos on YouTube, but just be on the lookout for this email. I do need to pull up the disclaimer. There is a risk in trading. Don't trade with money that you can't afford to lose. Stay on the simulator. Your results may not be as good as mine. I've been trading now for 28 years. However, how I trade, I'm just looking for patterns, geometric patterns that appear in the market day in, day out. I'm just looking at the 6J over here, and I was just looking at the MNQ. It doesn't matter which market you trade, they appear every day on multiple markets. Okay, so but I just wanted to mention your results may not match mine, but they should. So very quick advertisement, very 30-second advertisement. If you haven't already downloaded my ebook for Truth About Day Trading, please click on the description link below. Also, I'll be referring very quickly to a spreadsheet very soon. You can click on the link below and download that as well. Better still, become a member. Well, first of all, make sure you subscribe to my channel so you're kept up to date with all of my videos. Now for $197, this is 15-second ad. You get all of my indicators, you get all of my strategies. There's literally 200 training videos, but you don't need to watch them all. Okay, I've been doing this, as I mentioned, a long time. So there's a great big library of video, there's 38 PowerPoints, there's a mass of material, which for $197 you get all of that. You can join the link below, and even better still, when you do join, I've got a bonus going at the moment where you can attend 8 of my live, they are recorded if the time frame doesn't suit you, 2-hour coaching sessions. So twice a week, 6 p.m. to 8 p.m. Tuesday and Wednesday evenings, I run a live coaching room where I'm teaching you the psychology of trading, money management, how to trade my strategies, all that sort of thing. So you can get 1 month included in the $197. After that, you can drop me an email and say I want to continue. It's not an automatic subscription, so don't worry about that. Let's now get into this. Let me pull up my chair here. I've got a standing desk. Here we go. So the game changer for 98% of the population is, what if you could earn $1,000 a day? Now your target might only be $500 a day. I tend to find, just turn my air conditioner off, with young guns they're after $2,000, $3,000, $4,000 a day. All of this is possible, but how are we going to do that? Okay, now we've got to be realistic with our trading, especially to begin with. Remember, you're trading against traders that, like myself, have been trading for many years. But the great news is this is not rocket science, so anyone can learn how to do this. So traders, I just lost my place a little bit. We just got hit by a massive rainstorm. So anyway, it's passed. So I think we got up to you can learn how to do this. This is not rocket science. What you do need though is the right strategies, obviously, the right money management. That is, we never ever risk any more than 2%. Greed is what kills traders, and you've got to have the right psychology when it comes to trading. Let me now discuss a little about the strategies. Now this is what we had this afternoon. We are going to go across to the live charts because I want to show you the charts and point out a few things. Now I trade mainly on Renko charts and tick charts. 95% now is actually Renko. Why? Because they smooth your chart out. It makes it easier. Now some say, well look, you get in a little bit later with the Renko compared to tick charts. Look, it's nickels and dimes. You're not going to miss out on too much when it comes to the entries, but what you'll have is much smoother charts that are easier to learn how to trade it, particularly if you're a newer traders. So this is what I had as I was about to start recording that video. Now this is on the yen. You can apply what I'm about to show you to any market, and we'll talk about the NQ in a moment, because the micro NQ is huge nowadays, very popular, as is the NQ. But there's some challenges with that market, particularly if you want to trade of an evening. You see, the markets are open 23 hours a day, so it makes it great sense to get home from work, have dinner, then you can get into your trading. Not everyone has the luxury of not having to have to go to their job. Stands for just over broke. But seriously, there's some great trading. Now the Tokyo market, which is the yen, which is a futures contract. Yes, you've got the Forex market, the spot market, but then you've got contracts, futures contracts. And so the yen, which is what you can see here, is $6.25 a tick. And here I trade 8 lots. And the reason I trade 8 lots, just with my personal money management, just the way I manage my money, 8 works well for me. Now here in this particular case, I fired off a trade, and this was at 9:31. So this is 30 minutes after the Tokyo Open. So that time stamps, you can see there, that's Central Standard Time. Now so the Tokyo market opens at 8 p.m. Eastern, and you tend to get some really good volume. So because what I'm looking for is a market that gives me these waves. We want to trade surf the waves, and we also want volume. So let me just give you an idea here. I'll just pull this down and show you. Now this here is the ES. So ES of course is the S&P, one of the largest markets. Now I'm now recording this at 1:44 a.m. Central Standard Time, so a few hours after this particular video, these two trades. However, you can see here we've got a good healthy amount of trades or contract or bids and offers in the market, and so you typically see that when the market first opens. Now this is the challenge with both the NQ and the micro NQ, which I'll show you. So can you see just there, you've got a spread. Basically you've got and you can see that this is quite thinly traded, which I do love the NQ, and I actively, as you're about to see in a minute, I actively trade the NQ. However, I've sort of pushed that aside because of the yen, as you're about to see why in a moment, because I don't get anywhere near as much what we call slippage. Okay, and so on the NQ I trade 5 contracts at a time. Why? Because as you're about to see, on this market I trade 8 because I need less amount of money per capital per contract I trade. So this is one of the issues with the NQ. We go and look at the yen this time of day. okay, and look at the difference here. Look at the market depth you got there on the yen, okay, compared to the NQ. Now the NQ is $5 a tick. If you trade the micro contract, okay, it's 50 cents a tick, 10% of the value. Likewise on the ES, it's $12.50 a tick, or $1.25 a tick if you trade the micro. And that's the beautiful part about this, as I'm about to show you. And I don't want to dwell too much because I know you want me to get into the strategies. However, you've got to have a solid foundation on why we trade a certain market. Now we go and look at the micro NQ just here, and we can see here, look, 10, 20, 11, and it's 50 cents a tick. So you've got much better liquidity than say on the big contract. But you can see there just with the yen, and as you're about to see, we get some great waves in the market. I'm just looking at the yen over here on another screen right now. Now with the ES, what's the ES looking like right now? No, there's some great waves. And here's the thing, the ES is a fantastic market to trade, but it's a gentle giant, okay? But the yen, we get these beautiful waves, much larger trading ranges usually, okay? So that's the difference. And of course then on top of that, you've got the Nasdaq, which is even better, however can be a little more challenging. I used to call it the nasty Nas. I've tried to reframe it to the nifty Nas, but let's get into this, okay, because there's a lot more I want to show you now. So starting off, say on the, so just there you can see there, okay, so that was 842, $100 a contract in, what was that, in less than 10 minutes. Okay, in 10 minutes they were over and done. And that's the sort of trading you can have in this market. And that's trading, I was after 10 ticks with the with trend, and I was after 8 ticks with the counter trend trade here. Now all of these setups just here, these are all mechanical rules-based setups. They're, look, I'd say they're 95% rules-based. The 5% comes down still with some experience. Do I have a trend? But even then it still comes down to really getting some screen time, but it's not rocket science, okay? It truly isn't. But very quickly, with this market here, you need $3,200 per contract to trade. Now you may say, well look, my broker only wants $500 for the day trading mode. Yep, that's correct. However, we risk up to 2%, okay, which means $60 odd, which is 10 ticks. So I may have up to 10 ticks loss here. Now there, $200 a day is 32 ticks. Look where you are potentially in 10 weeks trading 12 contracts. You're on your $10,000 a week. Now the big thing is, okay, that sounds great, Ray, but how do you do it? What you need then is, how many trades do we need to execute as scalpers and day traders? I classify myself as a short-term trader, as a scalper. Now typically with what I just showed you, I only need 4 of those net a day, which is these sort of trades here. Okay, so you can see that there are 8 step scalps, and I'll show you what a step is in a moment. It's basically a tick on Renko. Each time you go up, that's a step. So I need sort of between 4 and 5 net. But but you can see there the bottom line. Now how my compound calculator works, you're only adding another contract each time you double your money. So if you need $3,200, you then need to get another $3,200 before you increase your position size. And this is the difference between winners and losers in our business. Is winning traders are willing to do the things that losing traders won't do. Losing traders are impatient. They want to make a fortune in 30 days. They're desperate quite often. Traders, this is a business. You've got to approach it strategically. We can start on the micro, gain the experience, and go from there. Let me show you this. Now if you're jumping from this because you're a new trader, you're doing the wrong thing, okay? Because you need a solid foundation. Now if you look at this here, now you can download this spreadsheet, okay? Down the bottom here, you can, down in the description link below. And I know it's cutting across the corner, but what I'm saying here, where will you be financially in 6 months? Now you may not decide to become a member, that's fine, but I still want you to take this in, because this is what's going to make you great. You see, when the why is big enough, why do I want to become a day trader, the how will appear, how you get there. Now in this particular case, if you start off on the 4-tick Renko, now the challenge with the 4-tick, you can only trade it after hours, because when you head towards the New York session, the market gets a lot faster. A 4-tick Renko is too fast. The advantage is, though, you can trade the 4-tick 80% of the time after hours during what we call the Globex session. So if we look here, if you have a $400 account and you start off by targeting $20 a day, and what that means is when we build our account to 4,000, we can then start trading the big contract, and then we go for $200 a day, which is a realistic target. I have to give a disclaimer, I can't guarantee that, but you'll see it on the charts, okay, how I do it. So what this shows us here is we can be working a full-time job, get home, be prepared to put 2 hours into this, go for $20 a day. You can see us increasing our contracts, and then by week 12 I've now got over 4,000. I can now roll over and start trading the big contract. I've now got 4,000 because I've still got an income. I haven't left my job yet. I can continue on the big contracts here, and it shows you my weekly income. By a further 12 weeks I have the potential of earning up to $10,000 a week. Okay, so in total that's and your capital is now 46,000. It's taking you 24 weeks. I would say you add 10 weeks to that, because you start on the simulator. We get you the master the setups on the simulator before you go live. Now I've already mentioned about the Tokyo Open, fantastic market to trade, as there is the ES, but you just don't get the waves generally. Now all of this comes down to really getting clarity around your trading. Begin with the end in mind. Where do you want to end up with the trading? And you'll have many educators or traders say don't set a goal, but you've got to have that lofty goal, but it's also got to be realistic. Aim for the stars, hit the moon. So when we gain clarity, it gives us something to really focus on. So once again, starting with a $400 account, $20 a day, and we can see here within no time we're over. Okay, we've got the funds there, we can roll over, we're now trading the big contract. So the question is, okay, how? I need between between 3 and 4 of these trades a day, what we call 7 steps. I'll show you what that is in a moment. That's all I need. And for members watching this, it'd be 2Bs, your 34Bs, 55s, your 89s, etc. So we're going to start you on, well, I recommend, even if you've got a $5, $10, $50, $100,000 account, you start on the micro. So here you can see the live trading, and this was over within 2 hours, $92 trading 1 contract. Now this is on the 4-tick. Can you remember how much we need? $20 a day after commissions. So we start with that, and you can see consistent 63, 75, 88, all on trading 1 micro. So it's extremely feasible, and once you've got there, you then get, well, in my case I trade 5 contracts. You can't see it up in the corner because my big head's there, but this is on the 4-tick, which we've just been talking about. So here 220 per contract, and that was in 15 minutes. Now look at the timestamp. That's just after midnight Central Standard Time, which is sort of 5 p.m. my time, so I love that time for me. Here, and I've got here, perfect trading only happens in textbooks. You'll see me where I'll still have losses, but I'm pretty damn good at this. But all of these are patterns. Okay, so once again, 5 contracts, How much is that? That's about 250 per contract. Here once again $200 per contract. This one here a bit over that. Now here in this case here, I also push my luck with a lower channel. I don't always drop channels in, so just you might look at some of the things where I have Fibonacci levels I put on my charts, and I might drop a channel in, but that's not the key aspect, which I'll show you on the live chart in a moment. Okay, so 12 minutes, $1,500 out, 5 out of 5. What's that saying? Just moving it down there. Yeah, that was on the 4-tick once again. Oh, there it is there, 4-tick Renko. If the time frame's too fast, you increase the time frame, but you need to then allow a greater amount in your account. But that's sort of beyond this today's session. So what I'm going to do now is just take you for 5-10 minutes to the charts and just explain a few things there. But here's the essential. These 5 points are critical to your successful trading, but the beautiful part about it is we have indicators and most trading platforms. So even if you don't use an InterTrader or TradeStation, you might be a Thinkorswim or Trade of 8 or some of the others, you can set up just about everything here free. There's no need to go and buy expensive indicators. So just here, I like to use now floor pivots and Camarilla pivots. Okay, I like to use both. You don't have to go that far, but I like both. I want to know my prior day's open, high, low and close levels, the 89 and 200 EMAs, the intraday swing highs and lows. Sorry, I'm just keeping an eye on the market over here in case there's something interesting to tell you about. The intraday swings and the current day's open, high, low. Why am I interested in these? These all become what we call price magnets. The cash register rings when we sell into these levels, and they also act as support resistance levels. If you're a brand new trader, initially this might be going straight over your head. It's a bit like drinking out of a fire hose. However, it ain't rocket science, and once you've been through a number of coaching sessions, you have what I call aha, now I get it. Now I get what he's talking about. It's not difficult, let me tell you. Now let's quickly whiz back here. Let me just G this up. So what I'm going to quickly do is show you exactly what I'm looking at or looking for when the market opens. Now first of all, the market opens, the after hours market, just going to stand back up again, opens at 1700 or 6 p.m. Eastern, 5 p.m. Central Standard Time. And the first 5 minutes I'm not interested in trading at all. I just want to make sure it settles down, but this is what we're looking for. Now I wasn't trading at this time because I was preparing for this webinar I was doing. However, these here, these are all just plain vanilla trade entries. Okay, you got some what I call CT trades. As a new trader, you do not trade any counter trend trades initially. You focus on mastering trading with the trend. All of these are rules-based entries. Now as we come down, for the experienced traders and even for the brand new traders, this is what we call angulation. See these lines up here, price is strongly angling away. Now what is important is eventually you do learn what divergence is, because it'll help you identify reversals in the market and when to stop trading with the initial trend. Now here I've got some Fibonacci retracements. Quite often I'll put them on just for a matter of interest, and so I've got a little tool here. I go from there up to there, right there. It's exactly 50% pullback, and that's always, it's interesting. And in fact, I recorded a video on measured moves and fib retracements only last week. Now down here I've now got, basically for members watching this, we've got a T7. What I'm interested in is this, and this is where so many traders get it wrong. Whoops, and I'll just zip past there a little. This is where we want to be surfing the waves in the direction of a higher time frame, what I call our anchor chart. Now let me stop this from moving because this is important for you. On my anchor chart, what I can see here, I'm now gaining divergence. Now you don't need this indicator down here. I won't go into that. I've only got it for NT8 anyway. I call it the midline, but what I'm getting here, and this is what I call a platinum or a zero lag MACD. It's very sensitive. Now you can see I've only got it coded for NinjaTrader and for TradeStation. However, I give you the settings. You can set up a standard MACD that does exactly the same thing. Okay, so if you're Thinkorswim or another platform, you can set up the exact same, almost, well, 99.9% the same. This is what I'm looking for when I get a reversal. Now there's no such thing as certainties, there's only probabilities. We've got to learn to trade like the casino. So now I'm getting a T7, I've got a double bottom, it's a what I call a 2D, and away I go. And what I also have here is I've got 3 indicators on my anchor chart that of all turns that are screaming, trade me long, go long, go long. From this point to this point, that was an exact 61.8% retracement, by the way. But let me just then get into the trades that I then fired off. So from there to there, 61%. And you'll just be amazed how often we hit that. However, if you're a new trader, don't even worry about fib retracement levels now. What you're looking at doing is watching the flow of your EMAs. Now the white paint bar is my super scalper of there. So now I'm pulling back, and by the way, from there to there to there, this is a 70.7. Now Larry Pesavento who's been around for many years in the trading. He'd be in his 80s now. He's very famous when it comes to fib levels, fib extensions, and patterns and geometric patterns. And so he'll quite often talk about the 70.7% retracement, where generally you're looking at 61.8 up to 78.6, but the 70.7 is important. And so how you use these, and I may as well just quickly mention that. I know I'm running out of time. How we use fib levels. Do we have one of our generic setups or bounces at that time at the fib level? You don't trade Fibonacci pullbacks or retracements on their own. You're looking for additional confirmation. But anyway, back onto this. So I then had this set up, and this is what we call a T10. So members watching this, there's our T10. Okay, so at a T10. Now I also went for 10 ticks and picked up my 10 ticks on 6 contracts. Sorry, 8 contracts, my apologies. And that was at 8:39. I actually run a live trading room as well for my members, and every second week we actually trade 3 nights a week now at 8:30 Eastern through to 10:30 Eastern. And the reason being, you get some beautiful moves this time of night. So I went long, then I took this short right there, and let's see if it looks dramatic on the anchor chart, see if there's anything special I can point out there. And look, it's hard to see there, but this here, by the way, we call it T12, very mechanical, very high probability trade along with this one. So I shorted this, only took 8 ticks because I wanted to exit down here at the 200 EMA. Now let me then show you what then happened. We then pulled back that trade there, we then had a potential trade there, we then pulled back, had a deeper pullback. Look over on the right here, we're bouncing over here, potential trade. Let me just stop this from whizzing around. Okay, so at this stage I'm recording, by the way, when these come out. Let me just show you this here. Deeper pullback, had a little bounce. I want you to remember the term here, follow the gold. All of these are plain vanilla entries. We then reversed and up we went, had a bounce and had another bounce. Now what can you see mainly here? For putting aside the reversal setups, you can see here I'm trading EMA bounces. Now I'm making that very simplified because I'm also working in conjunction with my anchor chart. So the anchor chart is also confirming a number of things. Okay, we don't just trade, or you can of course trade with your entry chart alone, but we use a higher time frame so we can be trading in the direction. All of these are mechanical entries. All of these, okay, are just plain vanilla rules-based entries. And I think that was the first loss I think I would have had for quite some time. Then we pull back, another entry, then there was another lot of entries, and oh look, there is actually another one. Okay, so we had a loss up there, had a couple of winning trade, or you got one just here. Look at your super scalper with the trend. Now why was that a loss? It took me up by one tick. Okay, that happens. You've got to think and trade in probabilities of 20, and this is why we never ever risk any more than 2%, because so many traders, because of greed or desperation, they'll risk 4 or 5%. If they'll have 3 losses in a row, it wipes them out basically. What's so important is that if you don't have the right amount of capital, start on a micro, okay, where you can get going for $400-500 and build your account. But if you try to cheat, the trading gods will come and drain your trading account. That's the bottom line. Okay, so by thinking and trading in probabilities of 20, I'm trading fearless money. I'm a fearless trader. You know that, okay, I might have just got stopped here, but now I've got a nice little winner again. Okay, nice little winner, nice winner, nice winner. Okay, then I had a nice, that was an exact 61%. Look at all these. Okay, now this is just a normal day. So it's about what exactly are we looking at. Now for members, look at this here. Look at that beautiful 2B and pivot bounce here. Okay, look at that there. Okay, so and by the way, these are called steps. So remember I said you want 32 ticks a day. Now this is on the 60. I want to quickly show you the MNQ in a moment, but see, just said they're called steps. You need 32 of those a day after any losses and commissions. That's $200 a day return on a $3,200 account. What that means, this is the true potential here for you traders. And rather than thinking 10,000 a week in 10 weeks, now I've once again, see the disclaimer, you've got to master this money management strategies and psychology. Okay, if you go like a bull at a gate, you're going to have challenges. Now also, after training thousands of traders and being a trader for 28 years, what I can tell you is we tend to bring our personal problems to our trading. If you're struggling financially, and if you're going to approach this out of desperation, you've got to pay the rent money this week, you're going to have some challenges. Okay, you've got to have your trading account. So right, that's my business account, that's my trading account. You've got to learn how to separate that, and we spend a lot of time on psychology because it's very important. Let me now show you the NQ. Now the NQ, which is the Nasdaq, of course, this is the 4 tick right now. Okay, now it's now 2 a.m. Now with this I may have to jump up in time. So what exactly are we looking for? We're looking for our bounces. Now what's that just there? That is a pivot. When we buy and sell in the pivots, just remember they're trading zones, but quite often we'll be rejected by those. And so this is where it gets down to how we trade into pivots. In fact, we've got a setup called the T28, 90% accuracy in trading into pivots. Okay, whether you're long or short, 90% accuracy. However, there's some concrete rules. It's very rules based, very pattern based, easy to learn, but you've got to follow the rules. Okay, and so let me just catch up to where price action is right now. So members watching this, you already know this, that that there was a 2B, so you just had a plain vanilla 2B there, and with your deeper pullbacks you generally get larger moves. So traders, look, I will finish this up. Look, the bottom line, this is so much shit, or let me take it back, so much crap on the internet about trading setups. I still get traders that say these setups don't work. Well, the only reason they don't work is if you don't do the work. That is, you don't apply the rules, you don't get some screen time. This ain't rocket science, but traders are impatient. You know, they think going to university for 5 years to get a degree and going and, you know, working your butt off for years for you to get a decent income is the way to go. Here, 6 to 12 months, and you can be full-time, working your own hours, living your life of your dreams. That's the true potential. Trade with the trend, trade the EMA bounces, trade in the direction of a higher time frame. I'll teach you how to do this for only $197. Yes, you can go it alone. Let me save you a ton of time, and as I mentioned, you can come and attend 8 of my 2-hour sessions. If you can't attend the live sessions, they are recorded and you have permanent access to those. So as I said, there's dozens of videos, PowerPoints, there's really nothing else like it. So all right traders, I'll finish up there. I have gone a little bit further. I just want to quickly show you this on the 6th. Look at this here. I love this business. Look at this here. Look what we just had. For members watching this, look at that there. Beautiful. Now look at the moves just here. Okay, now one of the things we do, and this is something you ought to get used to, is scrolling this down. We want to see where our pivots. Now it is Monday my time. Now Monday it's still very early Monday morning in the US. And so what you'll find is my pivots are very close together on Mondays because I calculated the markets open on Sunday at 6 p.m. Eastern, and my pivots roll over at midnight. I won't get right into it now, but if you see those, think, oh, they're close together for an experienced trader, but that's why. But putting that aside, these are plain vanilla entries. You're after 32 of those a day on this market, making sure I'm looking at the 6J. If you look at the NQ right now, okay, what are you after there? You're after 20 of these steps a day. That's 200 a day on a $4,000 account, or 25. So, and just so you know, and if you're not aware of this, this is what we call a 4-tick Renko. It means from the low to the high, each candle is 4 ticks. Now half of that is what I call a step. It's 2 ticks, so each step is $10 or $1 on the micro where you might wish to start. Okay, now I'll show you this as well. This is probably of interest to you. So what I look at, and I haven't taken the screenshot, I can't do it right now, I'm recording on this one, but if we look here at the micro NQ, there's been 161,000 contracts traded today, and only 41,000 big contracts. Just shows how popular trading the micro is. Where the 6J, there's only thus far 55,000. They'll end up probably being 160, 180,000 contracts by the time the market closes in the morning or later today in the USA. So these are the markets that I'm interested in. You focus on only a maximum of 2 markets initially. Likewise, when it comes to the setups, you focus initially on 2 setups. Okay, really, that's all you want to do. 2 markets, 2 setups, and you start from there. It's called the Goldilocks rule. Not too hard, not too easy, just right. Okay, and you build from there. Anyway, getting past it. So traders, hope you enjoy this video. Come and join me as a member. I'll see you in the next video, and hopefully in one of my training classes. Cheers traders.